Good morning, I'm Chris Swift. Welcome to Market Day Report. It has been an exciting night again, as it usually always is when we see the markets trading up and down here and getting closer and closer into the harvest as the crop continues to mature. We've got the export numbers this morning coming up in just a few minutes with Brian Hoops. Let's take a look at the markets and see how they closed in the overnight session, getting ready for the 8:30 opening this morning. Corn market a little bit softer with September down 3 1/4, 466 1/4. December down 2 3/4, 478 3/4, and out into next year, March down 2 1/2 at 493 even. The soybean market has been one of the better performers out of all of them. Still up a little bit this morning with September up 5 3/4, 1340 1/2. November up 1/2, 1324 even. And out into next year, January up 1 1/4, 1335 even. Chicago wheat this morning had been a little bit softer and still is. September down 8 1/2, 589 1/4. December wheat down 7 1/2, 615 1/2. And out into March down 8 at 640 1/4. And we got Kansas City hard red winter wheat. A little softer as well. September down 3, 740 even, 738 the low tick. December down 3 3/4 at 748 3/4. And we tip over to the spring wheat market in Minneapolis, and a little bit softer, but not as much as the others. September down 1 3/4, 789 1/4, 788 1/4 the low. December down 1 1/2 at 804 3/4. We've got some export news out this morning. I'd like to invite our guest Brian Hoops in this morning. He is with Midwest Marketing. And Brian, good morning to you, sir.
Hey, good morning, Chris. Good to talk with you this morning.
Yes, sir. I know the export numbers are out this morning. I haven't had a time to breeze through them just yet. Can you give us an idea of what we're going to be looking at before we open up here at 8:30?
Yeah, sure. These export numbers were pretty much in line with pre-report expectations. We did see some large private sales last week of both corn and soybeans, and those are reflected in this morning's export numbers. So new crop beans at about 51.7 and corn at 27.7 million bushels, pretty much what the trade had expected. But those are some good numbers, and it narrows up the difference that we are trailing between last year and this year. We were about a couple weeks ago, we were about a third of sales of last year of soybeans, and now we've narrowed that spread to maybe about a half of what we were. So it's improved. It's not great by any means, and we're still trailing both corn and soybeans and wheat for that matter to last year's sales at this time. But because of China buying pretty aggressively of soybeans of late, that spread has narrowed up. Now, there's only been one private sale this week to an unknown destination of soybeans. It was a fairly large sale. There's been some rumors that China's been in the market looking for soybeans, been looking for hard red spring wheat, but we haven't seen any confirmations of that. The wheat sales, I think we're a 3-week low this morning, but still above the pace that's needed to reach the USDA forecast. So I don't know that the trade really reacts to any of these export sales numbers. Without any private sales, maybe we're a little disappointed, but we're going to trade weather, technicals, and the lower dollar here pretty quickly, I'm thinking this morning.
Okay, good. Brian, let me ask you one other thing. So you made some mention about China there, and it's always interesting when we talk about China because they're our biggest bean buyers there. So are our beans right now pretty comparably priced to South America? And what might be the tipping point that causes China to buy U.S. beans over South American beans?
Yeah, that's a great question. In fact, a lot of our products are competitively priced on a worldwide basis here. Corn and soybeans both, if you go out far enough into the fall timeframe, out into October, November delivery, when China is actually buying these products for delivery, that's where we're competitively priced. Right here for delivery, immediate delivery, we're not. It's South America origin, especially for corn, where they're harvesting that second safrinha corn crop, that we are not competitively priced whatsoever. There's a lot of talk that we are more competitively priced with wheat on a worldwide basis, but I think Russia is on a mission just to undercut any foreign country and try and sell their wheat to finance the war as cheaply as possible and just continue to keep moving that. That was kind of evidenced by Sovicon this week, talking about the wheat sales out of Russia last week. The shipments were the largest in 2 years, so they're continuing to push wheat into the world marketplace. And really, to answer your question about the tipping point, is that U.S. dollar. It's a little bit lower this morning, and that is ushering a little bit of fun buying into crude oil and gold, silver, and I think we'll spill into the grains this morning. But if that dollar would break and break substantially, that would be bullish for our export markets, and I think it would, give us that edge to be a little bit more competitively priced on a worldwide basis.
Right. And I watch that dollar too, Brian. I've seen it's kind of right up against very close to like a triple top right now from the initial recovery that we've had. So I could see some resistance. Stay with me, Brian. I'm going to go away and take a short break. I'll be right back with Brian Hoops, and we're going to talk a little livestock. Stay with us. Welcome back to Market Day Report. I'm Chris Swift. We're just a few minutes away from the reopening this morning. Let's take a look at how our livestocks closed yesterday and see what we're going to be looking into this morning starting out. August fats were down 32 at 178.77. October down 70, 179.27. And December fats down 60 at 183.57. Our feeder cattle market was a little bit softer yesterday as well. Down 50 on the August, 245.37, with that feeder cattle index, I believe, right at about 244.81, 94, somewhere around that upper 244 level. September down 77 at 249 even, and October down 57 at 250.97. We'll wrap up our hog trade here this morning. And yesterday we closed down a tick on the October at 78.17. A good bit away from the lean hog index right now, almost $20. December down 7 at 71.17, and Feb down 30 at 75.57. I'd like to ask Brian Hoops from Midwest Marketing to step back in for just a second. A couple of questions in the cattle market. Brian, we have seen some slight changes in packer slaughter, slowing down just a little bit. I've noticed the boxes creep up about $7, $8 over the last week. Anything specific we should be noting about that?
No, you're exactly right. That's my observation as well, is packers have really lost a lot of margin here in the last several weeks as they've had to pay up for the cash markets. So what they're doing in effect is to slow those kill speeds down. They don't have to buy as many cattle, and that does prop up our box beef. So we're seeing a nice rally there. Their margins are coming back in line. Right now, instead of a $60 to $70 a head loss, they're maybe at about $22, $23 a head loss. So we do expect that they'll keep those slaughter pace really low here for the next maybe 1 to 2 weeks. Last week's, I think, pace was about 613,000 head, and it looks slower this week compared to last week. And, so they're getting the job done in that respect. Unfortunately, the cash markets are starting to suffer. We saw a few head traded in the Southern Plains at 179. That's $1 lower than a week ago. And once those packers got those purchased, they lowered bids down to 178. And that's kind of given us the standstill in that Southern Plains. So it's a softer undertone for the cash markets this week. Any cattle bought today, I think, will be at that softer money. The cattle on feed report comes out tomorrow afternoon, which looks to be friendly. Once again, a couple different surveys have placement numbers between 94 and up to 96%. So that's kind of a wild card. Usually it is. Last couple months, I think placements have come in above what the trade was expecting. We'll see if they, if it reverses course this month and we see a little bit smaller placements. Absolutely.
Well, I tell you, it's going to be really interesting. And now that we're pushing that box back up, we know it's got to start impacting the consumer. And, over the last couple of weeks, we've seen a pretty good rise in most everything that is directly impacting the consumer there. And yesterday we got retail sales were up again. So, Brian, I certainly do appreciate you taking the time to be with us this morning. As Brian Hoops, he is with Midwest Marketing. And Suzanne, I think it's about time to hand it over to you on this beautiful Thursday morning.